This presentation is presented by Tax Free Life Advisors, a licensed and appointed financial services organization with independent financial professionals and licensed agents nationwide. Over the next several minutes, we are going to look at a comparison between a Roth IRA and an Index Universal Life policy for growing tax-free retirement assets and planning a tax-free retirement income. First, let us note some general regulations surrounding Roth IRAs. For example, money contributed to a Roth IRA is after tax or already taxed income. It is not tax deductible from your current year's income taxes like a traditional IRA, 401k, or other qualified retirement account. Also, after funds are inside of the Roth IRA, as long as you do not violate any of the IRS rules or provisions, the interest and gains will be tax-free, and all withdrawals after age 59 and a half will also be income tax-free. The annual contribution limit for a Roth IRA as set by the IRS is $5,500 per year unless you are age 50 and above, in which case the annual contribution limit is $6,500 per year. There is also an annual income limitation for contributing to a Roth IRA as set by the IRS, depending on your filing status, of between $10,000 maximum annual earned income if you are married filing separately, or all the way up to $181,000 maximum annual household income if you are married filing jointly. And finally, you cannot withdraw any interest or gains from a Roth IRA within the first 5 years without a penalty, and you cannot withdraw any interest or gains from a Roth IRA prior to the age of 59 and a half without a 10% early withdrawal penalty. An Index Universal Life policy is very similar to a Roth IRA in tax treatment, as long as it is set up properly as to not violate the IRS regulations for insurance policies referred to as a MEC, or Modified Endowment Contract. Money contributed to an Index Universal Life contract, like a Roth IRA, is after tax or already taxed income. It is not tax deductible from your current year's income taxes like a traditional IRA, 401k, or other qualified retirement account. After funds are inside of the Index Universal Life contract, as long as the MEC limits are not violated, the interest and gains will be tax-free, and withdrawals up to basis and policy loans against cash values will be tax-free as well. Unlike the Roth IRA, there is no annual contribution limits to an Index Universal Life. Annual contributions can be anywhere from $2,000 per year to over $200,000 per year and above. And unlike the Roth IRA, there is no annual income limit regardless of how you file your income taxes. And finally, unlike the Roth IRA, there is no age 59 and a half penalty for early withdrawals. For these reasons, the Index Universal Life contract is sometimes referred to as the rich man's Roth IRA. Now, let me share with you some compliance disclaimers about what we're about to view. The illustration provided contains non-guaranteed projections that may be higher or lower in the future. And the Index Universal Life product illustration is based on an annual average return of 8.2% in the non-guaranteed crediting strategies. The Roth IRA is illustrated using an alternative financial product, which may be any financial product, CDs, money market, fixed interest accounts, or otherwise. The illustration shown is based on the actual compounded growth rate of the S&P 500 from 1990 to 2010, less 1.5% for fees and expenses, and not counting any dividends. The income projection illustrates creating a guaranteed life income personal pension with the accumulated account value at retirement, currently estimated at a 5% payout factor with no remaining balance to leave beneficiaries. This presentation does not provide any legal, tax, or investment advice. This is an insurance product recommendation only, and please consult the insurance company product brochures and illustrations for specific information regarding the purchase of this product. Now we're looking at a male age 37 who's going to make an annual contribution payment of $5,000 per year to his retirement age of 65. So his contributions are going to be spread out over a 28-year period of time. On the left-hand side of the screen, I have option 1, an index universal life contract, and on the right-hand side, option 2, a Roth IRA. So we consider these two options side by side by looking at day number 1, the first contribution. Day number 1 on the index universal life, after making the $5,000 contribution for the first year, there is a tax-free death benefit available for the family and loved ones of this gentleman in the amount of $150,000. Now, on day number 1 of the Roth IRA, if the gentleman were to pass away, his family and loved ones would simply receive his original account contribution or investment principal in return. But if we project forward to age 65, the income tax-free death benefit for the index universal life contract will have grown to an estimated $649,000 compared to the Roth IRA potential account balance at age 65 of $477,000. But then we want to convert this savings account into a stream of tax-free income during retirement. And the index universal life product on the left shows beginning at age 66, the gentleman can draw out $63,609 per year as an income tax-free stream of income. If he withdraws this amount every year to age 90, he will have drawn out $1,526,000 from his index universal life contract. On the Roth IRA, if he takes his accumulated account value and rolls that into a guaranteed personal pension plan or guaranteed life income personal pension with a 5% payout factor, he's going to draw out $23,855 per year. If we forward that to age 90, that's $571,000 of total withdrawals during his retirement years. And then finally, on the left side, on the index universal life column, even at age 90, there's an income tax-free death benefit estimated to be $574,000. And the after-tax free income death benefit of the personal pension guaranteed life income on the right-hand side for the Roth IRA is zero. When we look at the index universal life, sort of the big picture, total benefits of ownership at age 90, we see there is a tax-free death benefit of $574,000. After taking withdrawals from age 66 to age 90 of $1,526,000 as a stream of income. So we have our total benefits of $2,100,000 minus our total client contributions of $140,000. That leaves us with a total income tax-free benefits of ownership for the client of the Index Universal Life contract of $1,960,000. We take this same concept, total benefits of ownership at age 90, and we do a side-by-side comparison using the exact same formulation, and we see that the Index Universal Life total benefits of ownership $1,960,000 compared to the Roth IRA total benefits of ownership of $431,528. So for these reasons, the Index Universal Life contract can be a very powerful financial tool for building and growing tax-free assets and then converting those tax-free assets into a stream of tax-free income while still providing a tax-free death benefit protection for your family and loved ones over the course of time. We would be happy to visit with you more about these issues or to address any questions that you may have. Please contact one of our professional advisors for more information or to request a personal financial consultation with no cost and no obligation. Thank you very much.